Good morning, everybody. Welcome to Loan Officer Breakfast Club. It's a fabulous day in beautiful Northern California. I don't know how it is in your neck of the woods. Maybe you let us know in the chat. That'll be great. Light it up. Hey, we're going to get started, Steve.
Right about? No.
You missed it, but that's okay.
No, I
the whole
didn't.
timing thing, is, well, you know what? You haven't played in the band for a while.
Oh my
So
God.
it's been a minute. So you're like, you're on the 2 beat instead of the 1
Oh, my
or
goodness.
whatever. You're all
Oh, my goodness.
discombobulated. Yeah. All right.
Wow. Well, thank
Listen,
you for
everybody.
covering me. I know you always got my back, so that's it.
We just went with your flow, brother. We just went with your flow. Yeah, that's exactly what we did. All right. Good morning, everybody. Welcome to Loan Officer Breakfast Club, brought to you by the Mortgage Marketing Animals every Monday through Friday, 8:30 a.m. to 9 a.m. Eastern Time for your free coaching pleasure. Because why the heck not, right, Kristen Simpson?
Why not?
Why the heck not? All right. Well, let's see. Man, we got some nice shining faces here. Maybe we should just chat with some people real fast and see
Lots
how
of cameras
things
on this morning. I love it.
Who?
I said a lot of cameras on this morning. I love it.
Yeah, me too.
Happy
man.
people.
Yeah.
Mhm.
Remember that REM song?
Go ahead. You know you want to sing it.
Shining happy people. I don't know the words. I just know that part. Yeah. Anyways, well, good stuff. Hey, guys, we got Jeanne Kelly in the house today, so that'll be fun. That was really interesting the last time you were here, Jeanne, the stuff you were talking about. So I'm curious to see what you got. Curious to see what you got for us today. It was very helpful, of course. So, hey, but maybe we should kind of poke around and just see what. Oh God, look already, Melissa Rochelle's here.
Oh, yeah.
And that's so cool. Yeah, you got to unmute now, Melissa. Come on.
Good morning.
What's going on? How are you?
Good. Pretty
Yeah.
good. I do have a win. I had an agent who I worked with a past client,
Mhm.
and she has a new preferred lender that has MSA agreements and all that fun stuff. So he had called her and was like, I want to look at this house. And she was like trying to get him to use her preferred lender. And he was like, absolutely not. I'm using Melissa. She helped us the last time, so I want to use her. So that felt really good.
Had you been staying in touch with the past client, or?
Yeah, they're in my CRM. They get
Yeah.
dripped. He said when he reached out to me, he was like, when I saw that you moved companies, I was so happy because I did not like that loan officer you was working with. And he was like, when I saw the email that came out that you switched companies, I was like, I told my wife and my dad, no matter when we buy a house, we're using her.
Wonderful.
That's awesome.
Well, I would say that that's a heck of a good win. So I'm going to give you a big honking cheer for that. It's a great way to start the show. Hey, you know what? I'm just curious. Let's stick on this line a little bit of doing the company switch and retaining the past clients, that kind of a thing. Anybody want to help in that regard? Like if someone's making a switch, when you made the switch, was it easy for you to retain the past clients? Were they cool about letting you go with the database, or did you have your database in another bucket that you just kind of re-uploaded? Or
I only the people that I really developed a relationship and had their contact information in my phone, and I went through the database and kind of just pulled in the people. I was already over a year out, so technically I could use those leads because they I was a year out from working for that company.
And that was the rule with them?
Yeah,
it was
that
a
was the
12-month
rule.
stay
Yeah,
away rule?
12 months,
Yeah.
exactly.
Mhm.
So when I moved over, I was like, hey, I'm right at that 12 months. Let me just go ahead and shoot it out to everybody. But I really just focused on the people that I knew that reached out to me directly and that I kept in touch with because I had built that relationship with them.
Okay, cool. Hey, what's everybody else's thoughts on that? I mean, leaving a company. I mean, what do you guys think about that? Some companies are like, cool, take your database, man. You know what I mean? Some companies are like, nah, man, you ain't taking nothing. You're stay away for a year.
Did
Fred,
you know you can go into Model Match?
Yeah, and pull all of your production, and it'll tell you every agent, every buyer agent listing.
You
agent.
can download it.
And
You can.
And your borrowers, it'll tell you, like, if you lost
Who
your
you
past
originated.
database,
Yeah.
it'll give you your past database back. How about them apples?
Them's good apples.
Mm-hmm.
Them's
Did you
good apples.
also know that you can go to ChatGPT and it can find public data on all those people? So you can get a link to their Facebook and their Instagram and their LinkedIn and connect with them on social as well.
Mm-hmm.
Shut the front door.
So an even easier way.
No, you got to get the list from Model Match first, but then you can.
Oh, you get it from
enrich
Model Match, and then you upload it, and then they can go out and find people and give you their stuff. Does it give it back to you in a spreadsheet? Of course it does.
Of course.
And of course, the even easier way
Huh.
is to keep a record of your past database. Right. And if you haven't done it in the past, start that today. Right. The best day. The best time to start is 10 years ago. The second best time is
today. Yeah. And probably the best thing to do that on is a Google sheet, just so it's in the cloud and saved, and you don't ever, I lost it or what have you. Right. So you just
we keep ours in 3 places. So we keep one at the office. I keep one at my house, and Diane keeps one at her house.
And there's
that's the value
at my
of it.
house. Yeah. You weren't aware of the one at my house that I'm keeping for you. No.
We already got that one.
Okay. Fred Curry, what do you got, man?
Hey, so good morning. I've seen it a couple of ways where I've worked for companies. I work for one now where they consider your database their property. Because just last week I have a list of over 1,000 agents in my CRM. And I'm doing Chelsea Gardner's class, and I was trying to get that list, and they had to make an exception and they would only give me the names and the email addresses. So because going in and getting 1,000 realtors, I probably maybe go into Model Match or something like that where I can actually print off a list. In fact, thank you, Carl. I'll do that today.
Yeah, that's easy peasy in Model Match.
Otherwise, yeah. But I have worked with companies too where they basically on my last day they had the spreadsheet ready for me to go. So here,
really, there's companies like that.
And that was more of it was a large company, but it was more of an independent branch almost. That I was working for, even though it was IMB. Yeah. So, but I just what Carl said, and I use the Freedom Tracker. And I've just been trying to make it more of a habit to every single lead I get, I make sure that phone number and email address is in there because I've had it happen more than not happen where the company would not give me access to, but basically where I had to either have my own copy or go into something like list reports or something like that to see my past production.
Got it.
Hey, can I throw something in on that too?
Yeah, throw it in.
Yeah. I worked for a lot of major companies and they made us sign these agreements that we wouldn't take our leads with us, our past clients with us. But I'm gonna tell you, if you're still getting the business, do it anyway. Take it with you because years are gonna go past. I've been in the business almost 30 years. I can't think of thousands of people I've been in contact with.
Yeah, indeed. Right on. Thanks, Deanna.
Good morning. So a couple things. I also made a switch in July, and it was tough. I had to go through my phone log, and I was able to download a lot of names, and I made sure I connected the names with the phone numbers, which I hadn't done before. And I had notebooks of my past notes, and I was able to gather, names that way too. So to build that up. But I was also glad that I kept the Freedom Tracker on Google Docs. So that was out in there in the cloud. So when I went back to get my realtor names, they were already set up there, on Google Docs. But I also wanted to add another thing. You had mentioned something or asked last week about the flood insurance on the west coast of Florida, where I am. So what even insurance companies right now, flood insurance is assumable. So, and I'm doing a loan right now where the borrower is assuming the flood insurance. So that's a great way if the seller and the borrower can work that out to assume the flood insurance because they may avoid some of the delays in closing.
Very good idea. Cool stuff. Great stuff. Thanks, Deanna. Appreciate that. All
You're
right,
welcome.
let's get to Jim. What do you got, Jim?
Well, I was going to add one thing real quick. And my bank takes a very open view. They feel like your customers at the bank were your prospects ahead of time, and they actually will give you the list if you decide to leave. So that's kind of nice of them. And listen to all you're saying. I went into Model Match, looked up my NMLS, pulled out all my realtors for the last 6 years. I forgot some of them, and then I got with Chris's group, and I've created my workflow to interact and just light touch, because some of them are not qualified agents, but every once in a while they bring one in. So automation's pretty good. So appreciate the comments.
Way to go, Jim.
Awesome stuff.
Nice.
Right on, Jim. Yeah. That rascal Chris Johnstone, always finding ways
to make it easier.
Always finding ways to make it easier. Good stuff. If you're getting value from this already, go ahead and tap that like button. It helps more loan officers find content that actually makes a difference. And hey, if staying ahead of the market and learning what's really working in our industry matters to you, hit that subscribe button and ring that bell so you don't miss another episode. We read every comment, so drop your thoughts down below. We'd love to hear from you and know what's working or what you'd like us to cover next. Thanks for tuning in, and we'll catch you here next time. All right. Well, cool stuff, man. Well, gosh, I don't know. I guess it would be time to, maybe just say, hey, let's talk to Jeanne Kelly. Credit boss lady. Is that what it is? Credit boss lady?
Yeah, I am.
Credit boss lady. Yeah.
Hey.
So, hey, we've had you here before, and we wanted to bring you back again because everybody really enjoyed what you had to say.
Because it's not really that important what credit scores are in our business, right? I mean, that really doesn't come into play.
I mean, a 490 is just as good as a 780.
Yeah, and learning the secrets of how to, improve their credit scores. Does that really matter?
Yeah, you know how they say age is just a number. So
it's just a number. Whatever.
Yeah, it's just a number.
Yeah,
totally. No big deal. Yeah. So what's cooking? You said you might have a couple things you wanted to share with us today.
Well, I want to, I mean, one thing that I keep hearing all the time, and like probably you hear things in the mortgage industry and you just want to cringe. The one that bothers me the most lately is about your balances on your credit cards. And everywhere I hear, they say, oh, make sure they're at 30%. Has anyone else heard that?
I tell people that.
Yes.
Okay, well, it's wrong.
Oh, wait a second. Wait a second. What do you mean it's wrong?
Okay, so I think because it makes up 30% of your score, that's why people keep talking about it. So the two parts I hear is leave it at 30%, wrong. Or I hear, financial advisors and people saying, oh, it should be at 0. It's a myth that there should be a balance. And FICO has said to me, no data, can't go in the algorithm. So we have to show a small balance. I'm not saying leave things that you have to pay interest on it, but if you have a balance, let's say 10% or less of what's available, that's like the magic number. So it makes up 30% of the score. So that's a fact. But the lower, the better, and not 0, not 0. So learn that statement balance date, because the day they kick the statement out to you is the day they give that same balance to Experian, Equifax, and TransUnion. So I know my statement balance date as much as the due date. So if I see let's say it's the 15th of the month, I want to pay my balance 72 hours before that. So the lower, the better, right?
Gotcha.
Okay, so that I wanted to make sure we talked about that because it's a big myth out there. I've been hearing it constantly. And when it comes to needing a few points, if your clients have balances, 30%, and they lowered them, you're going to get those extra points.
And so do that, but you got to know your balance date. So the balance date is different than hold on, let's get rich. The balance date, I don't understand that. So is that something you see on your statement? Like this is your balance date and this is your statement date? Oh, it's the same thing. So statement date.
Statement date.
Okay.
So the statement date gets kicked out to you. So the day you get your balance, like once a month, you get your bill, right?
Yeah. Yeah.
That's what I call that's the statement date. So when you get that, when they're telling you what your balance is, they are telling the credit reporting agencies. So that's why you want to know that date to pay it beforehand. If you're using it a lot, like I use my cards a lot, right? So I want to have the fun of the credit game, but I pay them before it gets kicked out. So when it gets updated, it's always that lower balance. Does that make sense?
Is that immediate too? So like if I know my statement date is the 30th and I'm going to bring my balance down on the 27th, right? So I'm going to go online, I'm going to pay it down on the 27th. Then on the 30th, it has the new balance on the statement date. That is transmitted immediately to the bureaus and is
that's when they send
algorithm of scoring.
Right. So they only send your balance once a month. Right. So when they're sending it to you, they're sending it to them. I'm not going to say it's the exact date. Sometimes it could take Experian or TransUnion an extra day or two. But basically, if you pay your balance before the statement date, that lower amount will be reported when the information
when they report it.
Yeah, exactly. So that's important to know. And again, not leaving the zero. I've had people, especially now, holiday season, right? Pulling out some of those cards they haven't used for a while, going to some of the stores. Yes, the information is on the credit report, but sometimes it's hibernating. The card hasn't been used in so long. You show a small balance, you might get 1 or 2 points. And sometimes you need that. 1 or 2 points here, there. I want every point I can get before applying for a mortgage, right? So, and also, let me also say, use it or lose it. If you're not using some credit cards, has anyone ever received, hey, we're going to close this account because you're not using it? You don't want that. We want the length of credit, how long you've been using that account. So holiday time, switch it up. I have cards, I know I'm going to use Netflix, right? So that might be on one card. I'm paying my insurance on another. I kind of mix it up like that. I'm not saying go into more debt, but use your credit wisely, attach things to things you already know you're going to spend.
See, that's what I've been telling Maria is if we bought that new boat and put it on the card that we haven't been using, that it just makes good sense to do that.
It's financial smartness.
Jeannie, on the cards, is there a magic number of cards or anything, like does that come into play at some level?
There's not like a magic number of cards, but it could hurt you if you have few. So you don't want 2 or 3. You really do want a handful or more.
Okay.
So it's not like, 20 cards is too much or too little, right? It's just timing it, how often they've been opened, how you're using them, the limits. But yeah, it can cost against you if you don't have a lot. I see clients who are becoming more successful don't need the credit as much and they're disappearing. I'll see their report 3 years ago to now, and it's not good, right? So we want to keep open, active accounts. So at least a handful. You don't want a thin file, right? So you've seen that where you'll look at a credit report. I'm not saying it's horrible, but you'll see a report and I actually looked at this yesterday. I can't get into the 700s, the person's saying. I'm like, you have 3 accounts. Okay. So you don't have a lot of credit. There's not a lot of length. So even though it's good, that's why you're having some trouble. We need to time this out to thicken that file. If that makes sense.
How about the old secured credit card idea? Remember that one? Like, you don't have any credit, go get it. And you're kind of new, go get a secured credit card and start that way. Is that legit?
Yes, you can still do that because if there's no data, they're not going to just give you credit. So to start secured credit cards and secured loans, you can get one of each because then you're getting a little extra points for mix of credit, revolving, and installment. So it just gives you that little extra advantage. And after 6 months is when you'll get a FICO score. You have to have an open active account for 6 months to get a FICO score.
Got it. Okay.
Can I throw a question in there?
Sure.
Yeah.
Does it the type of credit or who the credit is with, does that play any part in it? Because I've seen like people that had like Tiffany's and Mercedes and Bentley on their credit reports, their scores are generally in the 800s.
I see what you mean.
Yeah. So choosing the creditors between prime versus there is some tweaking in that, but not to pay attention. I wouldn't really worry about that. It's more the length of time, keeping the balances low, paying on time. Because again, in the beginning, sometimes it's certain creditors, I don't want to call them out, but there's certain creditors that'll give you a chance in the beginning, and there could be a little code in there. So, but that's okay if that's where we need to begin.
I like these questions coming up too, since we're on this line. What about the good old authorized user, right?
Authorized user still works. Okay.
Does.
I mean, one day it might not, but it does still work. It can be added to your credit report. So let's say I add my daughter on my credit card account. If it's not, American Express will put the new date. So if I added Cassandra today on her credit report, it would show an open date today. That's American Express. But most 90% of lenders will put the open date that I opened the account. So that's where she'll get the length of history. So if I put her on a Chase, a Citibank, right, she'll get the length of history. She'll get that account, everything about it, what my balance is, what my payment history is. And at any time I can take her off. So if all of a sudden someone did have a late payment, the person can come off the account quickly.
So does the same rules apply? So I've got a 620. I got to get it up a little bit. Parents got an account that I can become an authorized user. Is it the statement date thing again? Like if I become an authorized user before the statement date, then the statement date hits. Now it's going to report for me on that state. So that's a pretty fast. That's a pretty fast move.
And the other thing is, go look for free at annualcreditreport.com. And you can look, you're not going to get your lending score, but you can look at the data. Experian, Equifax, TransUnion sponsor that site. You can get all three reports there. Even though it's called annualcreditreport.com, you can go every 7 days to get your credit report for free. And it doesn't cost like a credit inquiry because you're looking at it. That's a good habit to get into.
Hey, just as a reminder, if you're enjoying Loan Officer Breakfast Club here on YouTube, you can catch our live shows. The live shows are really cool because there's oftentimes downloads and giveaways. It's really, really fun. To subscribe, you simply go to loanofficerbreakfastclub.com. That's loanofficerbreakfastclub.com. Subscribe and join us on our live shows. They're 8:30 a.m. to 9 a.m. Eastern, Monday through Friday. Hope to see you there. Huh.
Yeah.
Good stuff.
So good to know when you're paying balances, right? You're lowering your balances. You want to know, hey, is it really updated? Instead of just guessing and saying, hey, Frank, pull my credit, you would be able to say, no, I looked. My Experian, Equifax, and TransUnion, it's updated. I see my balance.
Interesting. Yeah, because I always thought that it was just kind of, well, you just don't know when it's going to hit the system. You just do it and just check back every once in a while. You know what I mean?
Mm-hmm.
So I didn't realize it was tied to the statement date. So.
Yeah, I got another question for Jeanne.
Yeah.
What about having people increase their credit lines around this time of the year? Everybody's giving out more credit because they want you to spend money and for Christmas. So I've seen that if you increase your credit limit, then your credit scores will go up because you have more available.
Well, yeah, 30% of the score is what's available to you and what are you using. So if there's more available and you're right, so that does help. And I always say, get the credit when you don't need it. As crazy as that sounds, right? We're not panicked. You know how I don't know if I have felt this because I had bad credit and got me into the industry. When I needed it so desperately, I would have taken anything, right? I'm like, I'll pay 35%. I just need it. So when you don't need it, take it. Then it's available. It's there. You're not in a panic. So when it's time to make the decision, do I need to use this? You're more, financial savvy. You're not stressed and in panic mode. So when they are offering me more money, I take it. The more available, the better. I can be in control of my credit. I know I'm going to use low balances. I've learned my lesson the hard way. And, so it's a really good thing to take that.
Yep.
Absolutely.
October, November, and December.
Yep.
Sure.
And moving, here's another thing. You can have the same debt, right? So let's say I have a client and they have $25,000 worth of credit card debt, right? And they're 50% to their limits. I can say, move that debt into an installment loan. And when you move revolving into an installment loan, your score will increase. Same debt, same amount of money, but installment loans, the amount of debt isn't calculated so much in that 30% of the score. And that is because, think about it, we can't have student loans, mortgages, $500,000, calculated in the balance part of the score. So that's why you move the debt if possible, and you can see an increase in the score.
Or move it to a 0% interest credit card. They're giving those offers out now,
but
too.
it would still be revolving. So that might help your budget because it's 0%, right? And maybe you can lower it. And I'm a big fan of that. But I'm just saying, if we want extra points, moving it out of revolving into installment, that's a better move, if possible.
Kelly, you got your hand up? Kelly
Hey,
Graham.
everybody. Hey. So thank you for these tips. For one, I did not know about the annual report can happen weekly, because I know some of those sites, I think they charge you like $1 or something, and they ask you if you want to do a plan or whichever, whatever. But the tip that I'm taking away is if you're a person that wants to increase the credit line, as you just mentioned, because you don't want to get it in panic mode, but then say something happens and your score tanks, that creditor has the right to take that credit line away from you, right?
So if your score at any time, revolving credit, if when you sign the application and all that, nobody's paying attention to that, click, it does say we are giving you credit based on what your score is today, based on this information. If your score was a 700 and now you are a 600 or a 580, and they happen to do their, check-in, which they do, they can lower your limit or close your account, even if you've never paid them late. Yes. But, so they can do that.
So true statement. Yeah. It can happen.
It can happen. And annualcreditreport.com. It's important to remember that name because there's some very similar that are not sponsored by Experian, Equifax, and TransUnion. So annualcreditreport.com does not cost you anything. And every 7 days you can go.
Yeah, because someone asked it in the chat and said, what is that? And I said, freecreditreport.com. It's not freecreditreport.com. And then somebody corrected me, so I deleted mine real fast. But okay, annualcreditreport.com. You can check every week or so, and it doesn't cost you nothing. And it's you looking at your score. It should be that way. I should be able to look in and look at my score at no cost.
Look at your credit report. Look at the data. It's not going to give you your lending score, but
it just gives you your report.
Yeah, which is important. Listen, that's what you want. You want to look at your report. Only Frank, what belongs on your credit report. I don't know where you lived. I don't know what your balances should be. It should be definitely in your financial habits to look at your credit report.
I know. Only I know. Not even my wife. Okay. So, hey, we're at 58. We're at the top of the hour. Woo. Jeanne, how do we get to you if we need help? We got clients that need some help. JeanneKelly.net. There it is.
Yeah,
Jen's all over it. So JeanneKelly.net is where you go to connect with Jeanne. She can help all your people that are struggling along, that need some improvement. They're super great over there, by the way. That's why I brought Jeanne to the show, because she's amazing.
Thank you.
So JeanneKelly.net is where you go to get some help. All right, good stuff. All right. Oh, well, thank you, Jeanne. We really appreciate you.
Thank you. Thanks,
good stuff. Yeah, that's great. Okay, terrific. All right, guys. So, hey, moving right along. Tomorrow, we're going to have Marlon Shakar. She's the CEO of AAA Appraisal Management Company. She's going to be talking about appraisals and AI, right? Yeah. So I think that'll be an interesting conversation as well. So some good stuff to learn there. But for today, Jeanne Kelly, thank you. That was fantastic. We all learned a lot. Again, JeanneKelly.net, guys. JeanneKelly.net. That's where you go if you need some help with your credit repair. So there you go. Carl White, what's going on? Yeah.
What are we doing today?
Today is, oh my God, what is today? Tuesday. So actually, let's call on somebody else to state that. How about Robin Johnson? Ooh, burn. She wasn't expecting it. Good morning. How are you?
I'm doing good, thank you. So today we are calling on our loans in process, including both borrowers or however many borrowers there are, the listing agent, the buyer's agent, the title companies, and the insurance companies, and doing the 3x3. Who do you know? Or can you do me a favor and if you have friends, family, coworkers that are looking to buy or sell or refinance, send them my way.
I would say that was done spectacularly.
Pretty darn
Wonderful.
impressive.
Thank you. Appreciate that, Robin. So I think we're clear. We know where to go if we need some credit help. JeanneKelly.net. We know what to do today on a Tuesday. We know where to be tomorrow at this time, right here. Same bat channel, same bat time. I think we're out of here. What do you guys say?
Hey, Frank, just real quick.
Jen, yes, today. What do you got?
Membership level. Meg and I have our dialed in class today, and we were talking about once you get a lead, what's the cadence? How often do you follow up? What are some things you do for that? So
good.
If that's a question you have, join us at 2.
That's wonderful. Wonderful. Okay, great. So just going to the website, 2 p.m. Eastern, go to classes and dialed in. Just dial in and dialed in. So good to go. All right. Well, I think we're good to get on out of here. You guys have a fantastic day, and we'll see you here tomorrow at the Loan Officer Breakfast Club where we will do it all over again. Jeanne Kelly, thank you. You guys have a good one. We'll catch up with you later. JeanneKelly.net, everybody. We'll see you later. Adios.
Have a great day, everybody.